Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this particular video, I'll be walking you through in detail from accounting standard codification 820, that is fair value measurement. This is part 1. In this video, we'll be discussing in detail all the definitions. So let's dive into to understand more in detail about accounting standard codification 820, that is fair value measurement.
Today, we are starting the new topic, which is ASC 820, that is fair value measurement of so that is fair value measurement. So in this, we'll be understanding in detail about the definitions, valuation technique, fair value measurement of liability, fair value option, and then credit loss for financial instrument measured at amortized cost. This is something we have already studied in ASC 326, but it ties with the ASC 820 as well. So the topic is fair value measurement. So I'm sure like throughout the accounting, whether you have studied in India or maybe like you are studying in different part of the world. So this terms you might have commonly heard, like fair value measurement of the assets and fair value measurement of liability. So today we'll be understanding in detail from the perspective of ASC 820 of the fair value measurement. So first we'll be understanding couple of definition, which include what is fair value, what is principal or most advantageous market, what is transaction cost, what is market participant, what is application of asset in use or you can say versus in exchange, and then application of liability. So these are certain definition will help in understanding the complete accounting standard codification more appropriately. So first we'll be understanding these couple of definition for which some of you are already exposed to, but some of you might not be exposed to a couple of definitions. So today we'll be understanding more in detail about all these 6 definition, which is those terminologies would be used throughout the ASC 820. Then after we'll be jumping on to the valuation technique. So there are 3 category of valuation technique. First one is market approach, second one is income approach, and third one is cost approach. So we'll be understanding more in detail what is market approach to do the valuation or do the fair value variation, or what is income approach and what is cost approach. In that we'll be understanding more in detail about various category of input which we take to consider or to calculate the valuation of the assets and liability under the different approaches, whether it's like market approach, income approach, or cost approach. So there are like a different category of hierarchy also for the consideration of the fair value, which will be level 1, level 2, and level 3. So we'll be discussing that also in detail. What is level 1, or you can say first preference when you are doing the valuation or when you are choosing any valuation technique. If first preference is not like doable, then you should choose the second preference, which is level 2. And if first and second level are not you can say measurable, then you should go with the level 3 techniques. So we'll be discussing in detail what is level 1, what is level 2, what is level 3, and then we'll be understanding the input based on the bid and ask price for the valuation technique. So there are 3 type of valuation approach: market approach, income approach, and cost approach. And in that we'll be using different inputs for the valuation and different hierarchy system, and lastly about like bid and ask price for the valuation technique. So we'll be understanding those individual item in detail in collaboration with the overall approach for the valuation technique. Third, we'll be understanding the fair value measurement of liability. So far in the first we have understood like definition, and second we understood techniques. Now doing the actual fair value measurement of the liability. So there also 3 you can say categories, which is like the first preference is quoted price. Quoted price basically, for example, in share market. So the prices which are being quoted in the traded exchange is called quoted price. Same way, if you see like in international market, like for example, petroleum prices, we all know like is being very much real time available in the international market. So the petroleum price are being already being considered as a quoted price because the value is being available in the international market. Same way, if you see cost price index. So some of the items are being valued based on cost price index, and that cost price index is being very much available in the open market. So that is called quoted price. Second is, or you can say second preference, if for any reason the quoted price is not available, then you can go with the observable price. So here we'll be discussing couple of examples. Like for example, if you are running a flight from Delhi to Mumbai, or maybe Los Angeles to New York, right? So if you see in the Los Angeles to New York, there are many flights which fly. It may be Delta, it may be American Airline, it may be Spirit, right? It may be Frontier. But now let's assume you are KLM, the new airline, hmm, and you wanted to set a price from Los Angeles to New York flight. So how do you determine the price for your airline? So you might be looking at like others company, other airlines, what price they are charging, and accordingly you will be doing some customization to reach to your price. Same way, if you see like hotel industry, nowadays like everything is being very much available on your mobile, right? Have you heard about the application called Skyscanner?
Yes, sir.
Yes,
Hmm?
sir.
Yes, sir.
And I'm sure you all might be using Make My Trip, Yatra,
Yes,
or
sir.
like 𝐂𝐲, Agoda, this kind of thing, right? So
Mm.
there, if you see, if you filter like 5-star hotels in Delhi, right? So you may see like various 5-star hotels have various prices, but how they reach to the pricing based on the observable price, based on the price of the other property of similar category, right? Then they do certain adjustment based on like additional services or additional offerings they have, right? Same way, if you see the rental, for example, in your building, if you see all the 2 BHKs might be having similar rent, right? All the 3 BHKs might be having a similar rent. All the 1 BHK or 4 BHK might be having a similar rent, right? But how the landlord reach to the pricing? It's observable price, right? So, for example, if you have additional property and you wanted to rent it out or rent it out, how do you reach to the amount that what amount of rent you should be asking for it? How you do?
Considering the observable price again, like what other landlords in that area are renting their house for,
Yeah. Mhm.
right?
And then what additional services or maybe less services?
Maintenance charges and all, what are they charging according to that?
Yeah,
Whether parking is included or not.
Yes.
yeah. So
So
whatever
whether
like
other equipments are there in the house or not.
yeah, it's furnished or
Yes.
unfurnished or semi-furnished, right? So based on all those things, you make an adjustment and reach to certain pricing. That is called observable price. Third one is like the valuation technique. So which we have discussed like market approach, income approach, cost approach, that we will be discussing. So first preference is always be a quoted price. If there is a quoted price in the market, then that's always be a first preference. And if the quoted price is not available, then the other competitor who are charging or what all additional services, product or less product or services which you are providing. So you make an adjustment to reach to the sales price. But when neither you have observable price nor you have quoted price, then you need to use the technique, valuation technique, and accordingly you will reach to the pricing. The next we'll be understanding in detail is about fair value option. Fair value option, like we all might have studied in our college days, like there are put option, call option, swap option, right? So in that case, how do you recognize the assets and liability for those options? So that will be understanding in detail. So when you have like option to purchase, when you have option to sell, or when you have like you can say swipe option, currency swipe option, or maybe interest rate swipe option. What are the benefits at the end you are getting out of that options, or what are the loss you are expected to be incurred on account of that option? So that you need to recognize either as assets or as liability. And same way you need to recognize the gain and loss. And lastly, and the most important thing is disclosure part. Then after fifth thing is credit loss of financial instrument, which we have already studied in detail along with ASC 326. That is being mapped along with ASC 820 when it comes to fair value measurement. So ASC 326 would be tagged to many accounting standards, whether it's like fair value measurement, whether it's like inventory valuation, whether it's being like account receivable valuation, or different, you can say, financial assets and financial liability valuation. So in all those cases which we have discussed in our earlier class, ASC 326 would be relevant. It's an independent accounting standard, but it support or it align with the other main accounting standards, right? So this is all the plan what we will be discussing in the ASC 820: definition, fair valuation technique, fair value measurement of liability, fair value option, and then last one is credit loss of financial instrument measured at amortized cost. So let's dive into the first topic, which is definition. So in the definition, like we discussed earlier, first one is fair value. How do you determine the fair value of any individual asset or liability? The price that would be received to sell a particular assets or paid to transfer a particular liability is orderly in an orderly transaction between market participants who are willing to buy and sell without any undue influence at the measurement date. What is fair value? It means the value which a knowledgeable and willing buyer is ready to pay and knowledgeable and willing seller is ready to accept. That price in the open market, that price is called fair value of the particular asset or liability. Make sense? Yeah.
Yes, sir.
Gurmeha,
Yes,
Ayush,
sir. Yes, sir.
Ashish.
Yes,
Right
sir.
now we are jumping into the core topics, so I may ask you like time to time the question also, right? So second thing is the principal and most advantageous market. This terminology also will be hearing in this topic. What is principal market and or what is most advantageous market? So fair value measurement should be assumed that the transaction to sell the assets or transfer the liability occur in the principal market for that asset and liability. So what is principal market? Principal market is the market in which reporting entity would sell the assets or transfer the liability with the greatest volume and the level of activity for that asset. So what do you mean by greatest volume? Any idea?
यस सर सर सो बेसिकली क्या होता है ना कि एक कंपनी है अलग अलग मार्केट्स में लाइक फॉर एग्जांपल एक्सवाईजेड कंपनी दिल्ली में बेच रही है बैंगलोर में भी बेच रही है मुंबई में भी बेच रही है बट जिस मार्केट में उसके प्रोडक्ट सबसे ज्यादा बिक रहे हैं द वॉल्यूम द मार्केट विच हैज द हाईएस्ट वॉल्यूम ऑफ क्वांटिटी सोल्ड उस मार्केट में द प्रिवेलिंग प्राइस वी विल टेक इट दैट इनटू कंसीडरेशन.
Yeah, very true. So maybe another example I can share with you. For example, the Reliance company, they have shares which is like traded on the stock exchange. So they are listed on Bombay Stock Exchange, and let's assume they are also listed on New York Stock Exchange. But in Bombay Stock Exchange, the transaction is more frequent and more volume. And in the New York Stock Exchange, transactions are very limited once in a while. So for them, for the share capital of the Reliance, which market would be considered as the principal market? Bombay Stock Exchange or New York Stock Exchange,
सर बॉम्बे ही होगा.
Bombay.
right? So why Bombay? Because most of the activity, most of the transaction of the particular shares are happening here in Bombay Stock Exchange. Right, same way like how Ayush has shared, like there may be certain items which may be good and the volume is extremely high of the sales in Bangalore, but in Delhi or maybe in Gujarat or maybe in you can say Northeast, the people are not aware of that particular product, right? And there will be maybe one or two of items selling in this particular state. So in that case of scenario, Karnataka would be the principal market for that particular product. It makes sense. What is principal market?
Yes, sir.
No,
Yes,
I'm
sir.
asking what is principal market?
So, greatest
Greatest volume and level of activity.
दोनों
And the
चीजें देखनी
keywords,
होती है.
इसके basis पे we can decide what is the principal market.
Right. So second is when principal market is not there, maybe like your product is very niche, right? For example, you have developed robotics. That's a very niche market, or maybe you have developed like metaverse, or maybe you have developed some agri-tech product, right? Which may not have like existing market. Then in that case of scenario, what option you should choose? The option you should choose is the most advantageous market. What is most advantageous market? If there is no principal market, the entity should use most advantageous market. That is the market in which reporting entity would sell the assets or transfer the liability with price that maximize the amount that would receive for the asset and minimize the amount that would have been paid to transfer the liability, considering the transaction cost of the respective market. So, most advantageous market is that market where you can sell at the highest price, right? Your product or services you can sell at the highest price. So, that will be considered as a most advantageous market. For example, let's say like our company, if we develop our learning management software. So in India market, probably we may be selling at less price, but in US market, we would be in a position to sell at higher price. Right. So in that case of scenario, for me, the most advantageous market is US market. Make sense?
Yes,
Yes,
sir.
sir. Yes,
Yes,
sir.
sir.
Right. So any doubt what is fair value, what is principal market, what is most advantageous market? So far so good?
Yes, sir.
Okay, so let's jump into the third topic, which is transaction cost.
सर एक
So-
डाउट था.
Mm-hmm.
सर अगर नीश मार्केट है तो मोस्ट एडवांटेजेस हमें कैसे पता लगेगा कि कौन सी है?
Where you can sell at high price.
ओके, तो सर हमने मार्केट में अभी कुछ करा तो है नहीं, तो हमें कैसे
No,
पता लगेगा?
give me an example. Like, give me an example, then I'll be in a better position.
तो जैसे कोई प्रोडक्ट लॉन्च करा अभी,
Hmm.
लेकिन हमने कोई मार्केट वैल्यूएशन वगैरह अभी कुछ करी ही नहीं है
No,
उस
how do you
प्रोडक्ट का.
launch the product without having a market research? You can't launch just बना दिया और बेच दिया. It's not like that. When you are making any product, you must have to do your market research.
हाँ, सर्वेज वगैरह थोड़े होंगे तो तभी.
So you have to do survey, you have to do market research, then only you'll be launching. Right.
ओके, गॉट इट.
So business will not happen just like that. It requires, like a lot of planning on different things, which include like market research is one major part of it.
यस.
Cool. So third one is transaction cost. Transaction cost, if location of assets or liability is not a key factor to transfer the assets or liability, then transport cost is not included. So transaction costs majorly include transport costs and other administrative costs. But if you have a product which is like sellable online, for example, like Bitcoin, options, swap, shares which you can do the trading in the demat format, or maybe like passing on, let's say, Amazon gift voucher, right, or Paytm, something like that. In that case of scenario, there is no transportation cost, right? As there is no transportation cost, you are not required to consider any transaction cost. But if location is a key factor, for example, in Senegal, we have phosphorus mine, and that phosphorus is very much required in India for any chemical reactions or maybe for any chemical company. In that case of scenario, bringing the phosphorus from the Senegal to India would be a huge transportation. So in that case of scenario, you need to consider the transportation cost to be the part of the fair valuation for your inventory valuation, or maybe the assets valuation, whatever you are importing or maybe transferring. Make sense?
Yes, sir.
Like for example, like if any manufacturing company, let's say any car manufacturing company, they have to install a machinery, and which machinery they have to purchase, let's say from Germany, and no other country or no other company can make. Like for example, Honeywell, they have very unique product for the industrialization. So no one on the earth makes such product which Honeywell do make. So in that case of scenario, whatever is the transportation cost or installation cost, that need to be added in the value of the asset which you are purchasing. Make sense?
Yes, sir.
Yes, sir.
Yes, sir.
Okay, so next one is, as of now, we are just understanding the definition. We have not yet gone to the main course. We have not yet gone to the accounting standard. Before getting into the accounting standard, we are trying to understand few definitions, so that when those keywords will come in the accounting standard codification, we should not feel confused. That's the whole objective. So market participant. The standard define market participant as buyer and seller in the principal or most advantageous market for the assets and liability that are independent of the reporting entity. That means there is no related party. Second is, the parties, buyer and seller, they both are knowledgeable, having a reasonable understanding about the assets or liability, and the transaction based on all available information, including the information that might be obtained through the due diligence or efforts that are usually and customary to the business practice. That means the person should be independent, right? Buyer and seller should not be a related party. Second, they both should have the knowledge of product, service, market, of the assets and liability. Third one is they both are able to do the contract. So who can do the contract? Hope you remember from your college days, Contract Act. Who can do
Yes.
the contract and who cannot?
Um,
Do you remember?
sir, या
Can
तो
any minor do the contract?
no, sir,
No.
mine cannot do.
No,
Can
sir.
any insane mind person do the contract?
No,
No.
sir.
No, sir.
Right? What? Who else cannot do the contract?
Uh, who is under an undue
Under-
influence?
Undue influence, right?
Coercion.
So,
हाँ.
sorry.
Coercion से अगर contract हो तो that's
That's
invalid.
not.
But
It's a
person हो ना. हाँ.
Mhm.
प्रेशर डाल के नहीं करवा सकते ना किसी काम में।
Sorry.
वही सर फोर्स से अगर कोई भी आप करा रहे हो काम किसी से तो दैट इज नॉट वैलिड कॉन्ट्रैक्ट, दैट इज वॉइड।
And who all can do the contract?
Who is independent, sane mind, not minor, और यही सब है सर. बाकी who is willing to do the contract,
And
knowledge.
has knowledge. Yeah.
Yes, yes, sir.
Right. More or less, like principally what you have shared is absolutely right. So here also, able to transact the asset and liability is also very important. The person who is entering into a contract for sale or purchase must be able to do so, right? It should not be minor, it should not be insane mind, right? And it should not be like you can say agent. So sometime like there may be a situation like agent showcase himself or herself as a principal, whereas he or she does not have any authority to sign certain document or to make the contract on behalf of the principal, right? Last one is willing to transact the asset and liability. They are motivated but not forced or otherwise compelled to do so. So all those things, like need to be considered when you are discussing or when you are thinking about market participant. Who all are market participant? Buyers and seller, right? And what is the quality of the buyer and seller? They should be independent, they should be knowledgeable, they should be able to transact, and they are willing to transact. Make sense?
Yes, sir.
Yes, sir, got
Okay.
it.
Next one is application to assets. In making the fair value measurement, an entity must assume the highest and best use of the assets by market participant. So it can be best use, or it can be, you can say, exchange. So use, when we say the word use, that means it is in combination with other assets. And when we say in exchange, it is generally considered as a standalone asset. So you need to look at both the ways the asset is being considered. So whether the asset is being used along with other assets, then it will be considered as in use or in a combination of other assets. When the asset can independently be used, it is called standalone asset. For example, if you have purchased a laptop, alongside with the laptop, you have purchased window as well. So can you use window without laptop?
No, sir.
Right?
No, sir.
The answer is no. Right? If you have purchased, let's say, antivirus, can you use antivirus without laptop, mobile, or tablet? The
No,
answer
sir.
is no. Right?
No.
They are always be in use. Same way, if you just imagine the plant and machinery of any big company, right? So there are two things. One is plant and machinery. Second is the installation and the configuration of that machinery with the respected software. Right, nowadays it's a digital world. We all know most of the machineries are automated. Right, how they are automated? Based on the usage of the technologies. Technologies mean software which is being embedded or implemented in the respective machinery. So the machinery is useless without those software, or maybe not efficiently used without the software, and that software cannot be independently used. So they will always become in use. But whereas there are certain assets which you can use independently as well. For example, your car, right? Inventory, account receivable, derivative. For that, it's not required to be clubbed with something else, right? So those kind of assets are called standalone or exchange assets. Make sense?
Yes, sir.
Yes,
So
sir.
let's understand the definition. The highest and best use of asset is in use if the asset would provide maximum value to the market participant, principally through its use in combination with other assets. So when do you use in use of asset category? When the asset which you have purchased give best of their results, give best of their market value when it is being used along with another asset or in combination with other assets, right? For example, installation or configuration, that might be the case of non-financial assets generally, like computer, software, antivirus. We have discussed the example. Conversely, the highest and best use of asset in exchange. So what is in exchange? If the asset should provide maximum value to the market participant, principally on a standalone basis. For example, car. For example, like any you can say machinery which is independent of anything else, or you can say cash, or you can say inventory, or you can say account receivable. So that might be the case, for example, in case of financial assets. So that will be considered as a standalone basis or in exchange assets. So there are two category of application of asset. One is in use, second is exchange, right? In use when you are using along with other assets, exchange when you're using it independently. Make sense? Application of asset.
Yes, sir.
Yes, sir.
नींद तो नहीं आ रही?
थोड़ी तो आ रही है सर, क्योंकि वो डेफिनेशन
ठीक है, maybe let's finish up this definition and these two questions, then we'll take a 10-minute coffee break.
ओके.
Okay. So application to liability. A fair value measurement of liability assume that the liability is transferred to market participant at the measurement date, and that non-performance risk relating to that liability is the same before and after its transfer. So fair value of the liability must reflect any non-performance of the risk relating to that liability. So what is application of liability? When you are doing the fair value measurement of any liability, what you need to assume that the liability is transferred to the market participant at the measurement date, and non-performance risk relating to that liability is same before or after the transfer. So what is liability? That means the obligation you have to pay to someone else, right? For example, let's assume company X has a loan of $100 million from Bank of America. Now company X has been told to company Y. In that case of scenario, the company X liability or the loan of $100 million will also get transferred. But at the same time, the owner of company B, who is like purchasing company, will take the, you can say, underwriting from the person who is selling the company A to company B, that if there is any uncertainty or if there is any change in the liability or if there is any issue in settling the liability, then you will be responsible to take care of that, right? For example, if you purchase any property, right? When you purchase any property in the sale deed, you clearly mention all past dues are being responsibility of the seller, right? Yes, no?
yes.
Huh?
Yes, sir.
Right?
Yes,
For
sir. Yes, sir.
example, if you have purchase a home from someone else, so and later on you get to know the house tax was pending, or water and sewerage bill is pending, or electricity bill is pending, then who is responsible?
Previous owner.
Previous owner, right?
Yes,
That
sir.
is like, so say that again. Kashish, you are saying something?
No, sir, agreeing with it.
Right? So that risk before the transfer and after the transfer will still remain with the principal liability transferor, right? Next one is financial assets or liability that is covered under other specific accounting standard codification are not considered in ASC 820. So there are certain financial assets and liability which is already being covered by the various accounting standard codification. So like that's a thumb rule. I'm sure like this we have discussed earlier in ASC 606, 842, 326. Everywhere we have discussed this as a common theme. When there is a specific accounting standard codification for any particular transaction, then the journal accounting standard should not apply. So this is a very fundamental or basic rule of the application of the law. When there is a specific provision available in the law, then you will be choosing the specific provision. But if there is no specific provision available, then you can choose the general provision. Same way, ASC 820 would be used for financial fair value measurement, right? But if there is certain accounting standard codification which has already been provided, then in that case of scenario, ASC 820 will not apply to them. For example, employee benefit plan come under ASC 715, employee pension plan also ASC 715, insurance contract 944, leases contract 842, warranty obligation 460, equity method of investment 823, and I would say revenue recognition also. That is covered in which accounting standard?
826.
Huh?
826. Oh, sorry. 606.
606. Don't forget. Okay, so let's do these two questions and we can take a break after that. Which of the following is not an example of financial assets or liability? Financial asset and liability. So financial assets are generally cash, account receivable, shares, debentures, right? Financial instruments. So here, which one is not coming in the financial assets and liability? So first option is a contract that will be settled in the company on equity. That means you have given certain work to any third party and that work they have done. Now it's your liability, financial liability to pay back to them. Yes, no?
Yes, sir.
Yes, sir.
So whether you are paying by cash or equity does not make much difference, right? Second
Yes.
one is cash. Cash is always be a financial asset. Shares is also being a financial asset and liability. Fourth one is advance received on a construction project. That means you have received a money, right? But in response to that, you need to do the work. So that is your advance received from customer. So it's not your financial assets and liability. Hence the fourth option is right. Next one is transaction cost. This is also we studied in the definition. So what is transaction cost? If you remember from the definition, what is transaction cost? Majorly like transportation cost from changing over from one place to another place, right? So that include fee and commission paid to agent, or debt premium or discount. No, that's not a transaction cost. Finance cost, interest cost is not a transaction cost, or internal administrative cost is not a transaction cost, right? So fees and commission which you have paid to the agent for transferring the property or inventory from one place to another places comes under the transaction cost. Make sense?
Yes, sir.
Yes, sir.
Right? Any doubt so far? What all things we need to study in the ASC 820 fair value measurement? Definition we have covered, right? We can take a break. So how much minutes you want to take a break? 15-20 minutes or 10 minutes or 30 minutes?
सर वो एक क्वेश्चन था फाइनेंशियल लायबिलिटी वाला नीचे.
First question.
हाँ सर, इसमें सर एडवांस हम रिसीव करें तो ये लायबिलिटी ना हो गया फाइनेंशियल लायबिलिटी.
But that's not a financial liability because you are not required to pay cash or share for that. You need to do work for it.
लेकिन सर लेंगे तो हम कंपोनेंट वही ना लायबिलिटी.
No. So this is like different. This is clearly you can say in the definition of financial assets and liability where you are settling the things either through share or through cash.
ओके ओके. हाँ फिर ठीक है.
Right. So maybe it's 11 o'clock. We can take 20 minutes break. Will that be fine for a coffee break?
Done, sir.
Okay, let's come back at 11:20 sharp. Huh?
ठीक है.